The most common transactions we'll have to do for inventory are when we buy it, which is called a purchase, and also when we sell it. And we need to know that for the identified cost method. So what was that? Just a refresher. It is where each unit of inventory is physically marked, for example, with a sticker, so it can be individually identified when a transaction occurs. So we're going to go through all these rules. We'll take them one at a time, and we're just looking at this one, sales of inventory. We don't really need a rule for the purchases of inventory. We didn't have that in that table. Why not? Because it's actually quite simple. The supplier tells us what the price is when we purchase. We don't, when you buy anything, you don't tell the shop, here's what I'm paying. They tell you what to pay. And then that just goes into the inventory card in date order. And each unit will be physically marked to individually identify. Let's take an example. So we're a business that sells these chairs. Here's our inventory card. And on May the 3rd, we buy 5 units for $44 each, including GST. And we paid with cash, receipt number 504. First of all, inventory cards do not have GST in them, so we've got to get that GST out. So I only want the unit cost without GST. So we know to do that, we divide by 1.1. So 44 divided by 1.1 is $40. So now I can enter that. I've got my date, May the 3rd. Details of the receipt number, which was 504. This is an in because I'm buying inventory. Inventory is coming into the business. 5 units at $40 for a total of $200. And over in the balance column, I just put what I've got. I've got 5 units at $40 for $200, and here they are here. Now, under the identified cost system, I will put some sort of identifying mark on these units. For example, a pink sticker. Maybe not literally right there on the chair, maybe underneath, or maybe on the box, somewhere where the customer possibly can't see it. They don't really need to. It doesn't look good. But there's some way for me to uniquely identify it. Then on May the 11th, there's a credit purchase from Wholesale Chairs of 3 units for $50 each, plus GST. Invoice A34. Now the GST hasn't been included, so we can just use this $50 here. We do the date, May the 11th. We do the invoice number. This time 3 chairs came in at $50 for a total of $150. So that's an in because we're buying inventory. And over here we just list, there's the ones that we still have, 5 at $40 for $200. And then here we put 3 at $50 for $150. And here they are here. So let's put some stickers on those. Let's put yellow stickers so we can identify them. Here's the problem though. What about when this happens? On May the 14th, we sell 2 chairs for $100 each plus GST with a receipt number. And the stickers on the chairs were yellow. Well, we need to enter that in the general journal. So for every sale, remember, there's 5 things that happen. So there's 3 things to do with the sale. There's the money we got. Or if this is a credit sale, this would say accounts receivable. But that's gone up for 2 chairs for $100 plus $10 GST. That's a debit of $220. The 2 matching credits for that are revenue for sales, $200. And GST clearing for $20, and together that represents the sale amount. However, what we need to do is the cost of sale. We do a debit to the cost of sales expense and a credit to inventory, and we don't have that number. It's not there. It just says sold 2 chairs, and we've only got the sale amount. So the problem is we need a system to get that cost amount when there's a sale of inventory. And under identified cost, it's really simple. We just go and identify the actual unit. What do we mean? Well, here's our inventory card. We've got 5 at $40 with pink stickers, 3 at $50 with yellow stickers, and then a customer comes in on May the 14th and buys 2 chairs. He says, I'll buy 2 of these, please. And those chairs had yellow stickers. And in particular, let's say the guy bought this one and this one, so he takes those. Well, now I can fill in my inventory card. I do May the 14th, receipt CC607. There's 2 chairs going out, so I'm going to put 2 here. Now I'm putting $50 because they had yellow stickers on them, and the yellow stickered ones were $50. But notice this $100, I don't need that for the inventory card. Inventory card only deals with cost prices. This is the selling price, so I don't need it. But over in balance, what does that leave me with? Well, that leaves me with 5 chairs with pink stickers at $40 each for $200. And I've got 1 chair for $50 there. So I should have 6 left, and I go 1, 2, 3, 4, 5, 6. Perfect. And the beauty of that is I can now fill in my general journal. So here's where we left it. We had the amount for the sale here in green, but we couldn't do this bit here. And what we're going to use our inventory card now is we said that's 2 units for the sale at $50 each. That's $100. So now I put that in there. I do a debit to cost of sales of $100 and a credit to inventory of $100. And that's our first rule. So we've got quite a few rules to remember, but the first one for sales of inventory, we can neatly summarize it and say it's pretty simple. The actual unit itself is identified.